Hello everyone, Clifford Bennett, Chief Economist at ACY Securities, and what an exciting day it is. First of all, the market tried to be bullish on the back of those US consumer sentiment numbers on Friday coming out of the US, which came on top of a hopeful peak in inflation and producer price index. But I've spoken about those numbers before, and they weren't quite as rosy as people hoped, particularly the producer price number, which was really, a fall of 0.5%, but only after gasoline prices were factored in at falling 16.7%, which means that the overall economy remains quite inflationary. For the moment, I'm really seeing that the China data today is the big concern. China data today is looking absolutely terrible. Retail sales softer than previously, not looking as good as expected by any stretch of the imagination. We're seeing the same things with industrial output and other pieces of data out of China today. But the big one I want to put to you and to really think about, particularly from the Australian market perspective, is that house prices, property prices in China fell the most they have in years. So a big drop there in Chinese property prices. Also on top of the earlier data today, which showed that yuan loans are well down. So people are borrowing less. People are seeing their property portfolio begin to diminish. We've already seen some mortgage boycotts. We already know that some of the big property development firms are in trouble. China looks to be well on track, already in perhaps the midst of its own version of the US GFC, because as we know, not all countries, wasn't really a global financial crisis, it was very much an American financial crisis exported to Europe. But the rest of the world did reasonably well. But certainly China is in the midst of its own crisis here. And I think there is a lot of downside risk to the construction industry in China at the moment, and that will begin to weigh on the outlook for Australian exports, of course. So I think we can see an ongoing slowing in the Chinese economy. I've been saying for some time, it is a long-term reset of the Chinese economy from those tremendous growth numbers previously seen to more Western style numbers in the 2 to 5% area. So a lot to factor in for places like the Australian stock market and particularly the Australian dollar. The Australian dollar could be a little bit toppy here, in fact. US stock market futures, Asia's tried to market higher, but it is faltering. So I'm really grain of salt with the recent equity market rally at the moment. But certainly I'd keep an eye on the Australian dollar given that Chinese data today. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.